Good morning, everyone. We think that the subject of open banking API is taking a whole lot of, getting a lot of attention these days. And why is this so? Open banking API basically is a concept that speaks to banks allowing access by third party to their financial data as well as transactions of customers in a controlled way, basically to drive innovation, to also drive transparency. And from what we are seeing, this is coming, as a result of various factors, partly being from the regulatory perspective, as we have in the UK and Europe, and even in other markets where it's not necessarily being driven by the regulator, we are also seeing banks that are voluntarily, as part of their digital transformation strategy, adopting the principle of open API. Another interesting thing that would be good to know is that the amount of APIs that are available there, and this coming from the programmable web, which is the largest API directory, has grown significantly from under 10 in 2004 with PayPal, introduction of PayPal's API, to over almost 3,000 as at 2017. This panel session, we are going to be, I have a wonderful team here of experienced professionals, both from the banking space as well as the FinTech space, and we are going to be discussing how this space is evolving, what are the opportunities that are arising, and more importantly, what are the considerations as we consider or as we begin to adopt open API in Nigeria. To my left is Deji Olowe. Deji Olowe is an executive director at SystemSpecs, responsible for product and services.
Thank you.
And just after Deji is another Deji, Deji Oguntonade. Deji Oguntonade is the divisional head for FinTech and innovation at GTBank. Welcome, Deji.
Thank you.
And just after Deji, I have Shola Akinlade. Shola is the CEO and co-founder of Paystack. Paystack is focused on enabling payments for businesses. Welcome,
Thank
Shola.
you.
And of course, to the extreme is Victor. I like to keep Victor as far away from me as possible. It's Victor. Victor is the group head, financial technology and innovation at Access Bank, and is also the program director at the Africa FinTech Foundry. Welcome, Victor. Okay. Yeah. So just getting into this, I think it would be good to get from the panelists, and I'll start with you, Deji Olowe. What do you think is driving this whole interest in open banking API?
Okay, thank you for the question. I think the interest in open banking API is a natural progression of how things have gone. So you say in the beginning we have traditional banking and it was good for a while. Then over a period of time you start seeing things like digital, like Boye mentioned. You see digital technologies becoming pervasive in life. And unfortunately, it looks like the banking industry has not been able to grow as fast as, how would I describe it, what is happening in the digital world. For example, we've had planes, but we've had planes flying autopilot for a very, very long time. Most of the planes we fly today are very, very advanced. They can fly themselves. But when you come to banking, the same teller that is attending to you, maybe this time around, is using a PC, is still sitting behind a teller point. Now, so the innovation is not getting there. Now, everybody is asking, why can't I get my banking services just the way I get my emails, my phone calls, every other thing? And this is what is driving this need. Now, when you ask yourself, why are the banks not doing it quick enough? It's because the business is good. So if the banks are making good money in good and bad economy, then what's the incentive to innovate? Now, this, for me, I believe, is what has been the major reason why everybody is saying, if the banks can't do it, give access to my data so that somebody else can do it for me.
Okay, thank you very much, Deji. Victor, what are your perspectives on this?
Well, clearly, because banking is a very traditional industry, where traditional values, heritage, trust, reputation, and typically very difficult to digitize concepts play a very major role in the performance of the bank. And also because banking is heavily regulated, under a lot of scrutiny from various regulatory bodies, CBN, NIBS, in the room, it's to be expected in a lot of ways that the evolution of the services that are offered will naturally be measured, deliberate, calculated, where risk management plays a very important role in everything that goes out to the consuming public. Having said that, the pace of innovation that we've seen coming from agile, nimble, and numerous FinTech startups emerging and encroaching into this space has proved to be a bit of a challenge to the bank. And for some banks, not necessarily all banks, this is an encouraging thing. And those banks that have chosen to embrace this challenge and either compete or collaborate with or acquire these FinTechs have found themselves at the leading edge of service delivery to customers in a way that stands them quite apart from their more traditionally based counterparts. I think it's a challenge that all banks will embrace going forward. And I think it's a challenge that, from a collaboration point of view, I mean, I don't know if Deji wants me to say this, but the adverts are already out there. People can see that there's a high degree of collaboration between banks and FinTechs, and I'll cite the example of what's going on with our payday loan initiative between Access Bank and Remita, which we've seen going out there. And this is something that's pretty much unprecedented. We'll see more and more deep, engaging collaborations like this that benefit the consumer directly.
Okay, thank you, Victor. And just as we explore this topic deeper, Deji Oguntonade, what are your perspectives in terms of who's the ultimate winner in this whole open banking API world? Who stands to gain the most, and why do you think so? Between the customers, the banks, the FinTechs?
Well, first of all, everybody stands to gain, but it's the customer that actually is the ultimate winner, because it's open APIs, I'll say, is also driven by the unending demand by customers who want things better, cheaper, faster, and more immediate. And that's driven acceleration in innovation and the need for banks to start to think of opening up, and the springing up of lots of FinTechs and other companies who feel they can actually deliver service to customers. So the customer is the ultimate winner. Everybody is working to service them better and to get a piece of the pie.
Okay, thank you. Shola, you're the FinTech. I'm going to put a bit of a twist to it. There's always been this notion that the FinTechs, in any case, need the access to the bank's huge customer database to scale. Do you think that the FinTechs, are the real advocates for this whole open API because, they the way it is, the value proposition for them seems almost, very clear. You want access to the bank's data.
Good morning, everyone. I think, like you said, the customers are the biggest winners, but the banks are the next biggest winners because for two or three reasons. Number one, as a bank, it's very difficult to satisfy 7 million customers. So when you have 7 million customers coming at you with different needs, it's just difficult. So you need help, So of course, FinTechs are willing to help. The next thing is that with open banking, it means people can build things. So one of the very interesting open banking apps is something called SystemSpecs, where you can build a mobile banking for blind people. I don't know if there's any bank in Nigeria that is thinking about blind people, but the advantage of open banking is that people can innovate, people can help you service your customers better. And then the third thing is that, again, with all sense of respect, I think banks are very serious people, but their customers are not very serious. So you see people on Snapchat, Instagram, like all these places, and so people live their lives elsewhere and just keep their banking somewhere else. With open banking, it means that I can build a game that connects to my bank account, or that people can connect their bank account to. And then you see people playing that game more and having to use their bank, or like Spotify, for example, can connect to your bank account. Round up right there. But and then your playlists, if you have money, maybe it plays Paystack, plays P-Square. If you don't have money, maybe they play Asha, So No, I'm just being futuristic about it. But the real point is that there's a lot of things banks are not thinking about. And the only way to achieve this future is for the banks to open up and let people, the bank will become a platform, and then people will innovate and help you serve your 7 million customers, and everybody will be happy.
Okay, thank you for that. Deji Oguntonade. I think in an open banking era, where a single entity, a bank, in this case, or a financial service institution, doesn't necessarily need to provide the end-to-end set of solutions or products to meet the needs of the customers, who unfortunately most times transcend the borders of a single organization, and you begin to look at things around even an individual that has several bank accounts, probably has an investment account with another third party, has a loan running with another entity, has his stocks being managed, and it's all over the place. And as you begin to appreciate the fact that one single entity may not necessarily be able to pull this together, and APIs are definitely going in that direction of breaking the barriers between all such entities and helping the customer to have that complete view. What sort of factors or considerations do you think that banks or financial service institutions in this case need to begin to consider in their API strategy?
Well, again, the major factor is what your customers want. I think we need to scrutinize and see what the customers want, and how do we now approach delivering what these customers want, even beyond the banking services. So you look at what are other things that customers are doing along their lifestyle needs, and seeing how you can fashion out collaborations and partnerships with entities who are well focused on those areas, and you expose some of the banking elements of banking needs and to these trusted partners, and they run with those needs and deliver the service to the customers. Ultimately, it helps the bank to accelerate innovation. It helps the bank to even grow and retain its customer base. And again, the bank is still focused on its core business while it partners with those who are more fashioned out to deliver those services.
Okay, thank you. So we do agree that the banks basically are not under so much pressure to provide everything.
No.
Yeah. So Deji, Olowe, I know recently you launched a product that aggregates accounts for customers. What are your own perspectives around the sort of API strategy that should be driving such products, both as a FinTech organization and, of course, you've also been in banking. What do you think?
Okay, thank you so much. So my perspective with the Remitter mobile app we launched, the reality is that Remitter itself as a service, showing all the different bank accounts you have, has been around for like 12 years. But because of the stress of having to go to every bank, it's been mostly restricted to corporate customers. Now, by the time we brought it to the mobile and said we start talking to every bank, now that is where the game became very interesting. Now, what is the need for a mobile app that allows you to see your bank account? If I ask everybody today, almost everybody here has a phone that has SIMs. Hardly can you find one person that has just an email. You probably have a Yahoo, an old one, you have a Gmail, you have Hotmail somewhere. You see everything from your single device. So having one device to do everything is something that's become like standard. Now, we understand the concept of open APIs. We have these APIs available for everybody. But then you see that the perspective of the banks have ranged from extremely supportive people, at least even in this place, we have banks that actually help us to develop this process, to on the other side, maybe hostile, where they feel, and I can't blame anybody because they feel it's a competition, to people in the middle that are just interested in commercials. Now, for us, it's not surprising because we know that maybe in 3 years' time, 4 years' time, when this becomes a standard, in hindsight, you say, okay, no big deal. But progress always takes time. But I believe that by this time next year, it's probably going to become normal for maybe a GTBank being able to offer a service where its customers can see their Access Bank account right within, and Access Bank is not going to have a problem with it.
Okay, thank you. Victor Okigbo, I'm going to write a little bit on Deji's example here. So as we look at the sort of role that the aggregators play in this space, and that whole point of being the one consolidating the view for the customer, is there a risk or a potential threat to the banks in terms of being pushed farther away from the customer interface, especially as you look at emerging players or technology companies that are really able to give the customer a more holistic view? Do you think that there is such a threat? And if indeed there's such a threat, how should banks really be addressing this? Because when Wale spoke, he mentioned that whole bit about banks becoming the utility, becoming the commodity at the back end, while somebody else is delivering the superior customer experience. Do you think that there's a big threat that the banks will be pushed away from the customer?
Do I think that banks are in danger of being disintermediated?
Exactly.
Well, it's a tough question. And then how do we respond?
Exactly.
As traditional banks? First of all, yes. I do believe that banks are clearly in danger of being disintermediated in the account information process and in the payment information process. As PISPs emerge and as AISPs emerge. We've seen several things moving us in this direction, not least of which is regulation in Europe and in the UK, which is being pushed back against in Canada and in some other markets. But overall, I think it's inevitable that this is the way the world is going, and this is a train that's not going to be able to be stopped right now. More and more services are being consumed by users and intermediaries as APIs and as interactions between various applications. It would be rank folly to close the doors at this point and not allow third-party players to interact with your APIs if you're a bank. It would be wiser I'll use the example of Access Bank, to take the time, develop those APIs, document them properly, create a sandbox, and then open it up so that third-party players can interact and experiment to some extent, and then take the learnings from those experiments and push out into the real world and create solutions, and invite others to also create solutions that consumers want. So Access Bank held a hackathon in, probably the first FinTech hackathon in March, April of this year. And there were 170 different participants engaging with, interacting with, and using real-world banking APIs that they were allowed to have access to in a safe environment, nicely encapsulated. Among the learnings from those were refinements of our own APIs as they stand. We've pushed the boat out a little bit further and engaged in further collaborations with third-party players to offer things like payday loans to customers. One of the ways to safeguard against total disintermediation is to take a proactive stance and to lead in this regard, so that the bank itself becomes one of the dominant AISPs or PISPs in the marketplace. And in that regard, there'll be little or no disintermediation. But ultimately, they're just two broad strategic choices facing traditional banks. In the face of the onslaught of services being offered by fintechs, in the face of the increasing movement towards open APIs and open API banking, banks are either going to become extremely high-value advisors and consultants to high-value clients, or a complete utility, like what the other speaker described. And at both ends of that spectrum, there is a lot of money to be made for the banks, and there's a lot of value to be created for the consumers.
Okay, thank you, Victor. Shola, your company Paystack is one that enables payments for businesses, and I know you've also layered that with some value-added data insight services. And part of the value proposition for your customers is the ease and speed with which they are able to integrate with your payment solution. test the integration, and ultimately deploy and hit the market within a very reasonable period. So essentially, your business is really running an API-led architecture, so to speak. What sort of strategies or recommendations do you have in terms of organizing as an API-led business?
Yeah, thanks for that. So I think there are 4 things or 4 big buckets the banks need to think about. The very first one is authentication. So how will the customer authenticate? How can he even know the people he has linked his accounts with? When he's tired of that, of somebody, how can he remove that person? So that first authentication layer has to be well thought out. Now, the second one is account information, like Victor mentioned. So what kind of information can my customers get? More than even my customer data. So Deji Olowe has a pet project. It's like an open banking framework. And more than account information, it can also be your bank. Like, do I have a list of all GTB ATMs? Like, can you make that available via API? Can you make some of these things so that people can start making sense of it? So the second is just what kind of information do I want to expose and how do I expose it? The third is payments. So payments information. So the second one is more read-only. And the third part is more how can people give other people access to make payments? So how can Konga link to my account or Konga Pay? Or so that part also needs to be well thought out. There's some ideas around whitelists there. So the bank has to maintain like an active whitelist and blacklists if possible. So that is the third part. And then the fourth part, which I think is the most important part, is intelligence. So we're talking about what the biggest winners will be. And I think the banks can win if they adopt an intelligence-based approach to this. So the advantage of open banking is your customers are using third-party applications. You at the bank can now sit back and figure out, oh, these are the customers that are doing this. These are the customers that are doing this. These are the people paying on Jumia. And you can now start making sense of that. That's what Facebook does very well with their platform. So and they do that a lot. So I think those are the 4 big parts.
Okay, thank you for that. Deji, Oguntonade, I'm sure a lot of us know that GTBank is currently looking at opening up its APIs and through a developer portal, which is still ongoing. In the very, very summarized way, what would you say is the strategy is driving this initiative, and what are the sort of immediate to long-term outcomes that you expect from this initiative?
Okay, well, I've mentioned it before that it's due to increasing customer demand. It's also in a quest to accelerate innovation. We're taking innovation beyond our 4 walls, and I'm looking to partner with agile FinTechs to deepen our penetration in terms of customer acquisition. So that's what's driving our open API, our open banking activities. The current stage where we are, we're testing with a few partners, fine-tuning, and after we're done with that, so we're confident enough, then we'll open up to everyone.
Okay, thank you. Deji Olowe, I know you mentioned it slightly earlier when you talked about the scenario we're having in Canada, where the Canadian Bankers Association, have basically done a formal report to the regulator to sort of caution them that yes, we know Europe, the European regulator is pushing for this, and everybody is saying open API, but then we need to approach this with caution. And part of the concerns they've raised around the risk first to the customer in terms of their data privacy, their security, and then more importantly, even to the stability of the national financial system. What are your thoughts? Do you share these concerns, and if so, what sort of recommendations should we be looking at to address this type of fears?
Okay. Now, the Canadian banks are reacting to PSD2 that is going live next year, where regulation is asking every single bank to allow their customers to hand over access to their accounts to just anybody. But obviously, responsibility and accountability goes back to the customer. If your money disappears, that's the end of it. But for the Canadian, I think there's a fundamental problem they need to look at is who owns this data? So I have an account with a bank, I do my transactions. Does it belong to me or does it belong to the bank? Now, this is where the challenge is. So for the Europeans, the way Europeans always believe human rights and the rest of them, they believe that you own your life, you own your data, you can do whatever you want with it. You are an adult, you are responsible. In Canada, the banks feel they own it. Now that's where the challenge is. The data belongs to the customer. He has the right to do whatever he wants with it. Now, it doesn't mean that the banks should open themselves up and then you have breaches and frauds and the rest of them. So access to data and security of data are two different things. What the bank should focus on, which is the reason why I'm not on their side, is if we are going to give access to our customers to give data to anybody, how do we ensure that this is done properly? How do we ensure this is done securely? How do we ensure this is done responsibly? If that is dealt with, I think customers have the right to do whatever they want. I can take out my cash and give it to anybody I want.
Sure.
Yeah.
All right, thank you for that. Victor, just as we wrap up, I want to throw this is not my final question though. So, and I want to anchor a bit on what they just said. This whole concept, a lot of the underlying principle through which we're looking at this open API is that fundamentally the customer owns the data and should be able to determine who has access to their data, what it's used for what period. But then again, there's also that other consideration that the banks invest a lot and continue to invest in the infrastructure with which this data is maintained, and also even providing the support, and more importantly, the investment required to open up the API. What would be your own take, as a bank representative here around, this ownership of customer argument?
I think that's a fairly important and straightforward question. I mean, in the context in which we're operating, in the absence of strong privacy laws like what you have in Europe, I think it's up to the banks to lead and take a very responsible position and adopt the highest standards of privacy. It's actually a source of potential competitive advantage and something that's actually campaignable in terms of marketing when you're communicating with your consumers. I also think, broadly speaking, both consumers and shareholders will find it valuable and useful that the bank is taking a sort of an ethical and a leadership stance in terms of data privacy and data ownership. And that can help to foster some kind of deeper collaboration with the regulator to create the right enabling framework for correct privacy and data ownership to occur. My philosophical bent is to obviously insist that customers own their own data in any event and in any case, whether the APIs are open or even in the case where APIs are not even open and they're closed. The customer data is theirs.
Okay. Just as a final word, I'd like to hear from Shola and Deji, Oguntonade. So in this, as we begin to embrace this concept of open API in Nigeria, what would be the sort of recommendations, or what sort of role do we see the regulator playing in this space?
So for me, I think guidelines are important. So it will be good to give some clear guidelines. The CBN has done that with e-payment operations, with the guidelines to e-payment operations. So this is what should happen. These are the people that should be doing this. This is why you should be doing this. This is how you should be doing this. So that, again, as you also, as a FinTech, you want to also know what, you just want to have some clarity around how the regulators are thinking about it. So my direct answer is, I think regulators should give guidelines, and then executors should interpret the guidelines.
Okay. Deji Oguntonade.
Well, it's the same thing, guidelines, but most especially around security of the customer's information.
Okay. All right. Thank you very much, gentlemen. I think it's been a very, very wonderful session. I've really enjoyed having you guys on this panel with me. Thank you.